All right, good evening, guys. Ken at Tortoise Capital, nightly strategy podcast for April 13th, 2023. Thanks for your patience. We had a make-up soccer match tonight, so that made me a little late on the foundations check-in. On the foundations course check-in, we covered a good class on the MACD Four Seasons and how to interpret the Red River on the MACD Four Seasons. Just and to reinforce that lesson for the guys. When you see the Red River here, this is a 30-period Bollinger Band on the MACD itself. And so when you get these sharp, extraordinary, terrible moves, the signal line leaves the Red River until it joins up again down around in here. And then that tells you that this terrible, horrible, large magnitude move downward might be over. And then the Red River is the new normal range. And so when it stays inside here, it's just chopping around. This is all just chop. But when it comes out of the Red River in the other direction, so you have a big move out of the Red River here, and then it chops around, stay out. And now it leaves the Red River. You got this nice move in the spring to here. And then you get a summer, fall, summer. And it's all stays out of the Red River until here, which is when you are advised to start thinking about exiting. And you get that whole move. So you get that move, you get this move, and this little retracement here above the zero line starting to come through. This is telling you there's more room coming because this move was just enough to get it across the Red River. So there's a whole upside move. I hope the move is that big. And that's why in Alcoa, I still stayed in this one and didn't take the exit. So today's lesson from the foundations, it was about a 30-minute class, was a discussion of how we compute that Red River, how we interpret it, and then how the tactical time frame is supported by this smoothed long-term trend window. So this one gives us the big turning points and doesn't get caught up in the tactical prices. But in here, we can get these little tactical plays like the turning points in the RL10 and the PSAR flips and all that jazz. And so taking those together, tactics and operations, we call that operations as the next higher level. Operations. Those two work together to get our timing right and then to get the big timing points right. And just like all our other signals, this MACD is fractal. Now, for the boys in the foundation, I told them the default for us is the 1030. But lately, I have been exploring with the 430 based on some work we've been doing with Trader X. Both of those can work. The 430 gives you a little bit more aggressive turning points than the 10. It catches these turns just a little bit quicker. So I'm experimenting with the 430, and I really like it. Okay. But that's what we mean by this is the Red River down here. This is what the normal for the MACD is, in the same way that up in the Northern Tactical, and we have the river on, that is the normal area for price. Okay, so back into the scheme. So Alcoa, we had this nice move. We got the COTA 2 entry today early, and it closed well for +2. And I decided to hold it because it did not fail yet from the resistance, and there's still this much room to the 10-day high, and it's still early days, and it has room to go. So I decided to keep that one for the potential, and I will look to add a second position if Alcoa breaks above today's range. That was not the case in the other two metals. I just want to go straight to them first to show you that why Alcoa is the better play. In Cliff, it has not had that same kind of strong previous move. It's locked into this sideways chop, and and this was showing no signs of breaking out. I would have been probably better off just exiting right here, but because it still was above, I'm going to take it. But I don't even feel good about that one. I much prefer Alcoa. I'm sorry, that was AI. Here's Alcoa. My bad. I'm sorry. This is Cliff. So Cliff, I did take that COTA 2. I thought so. Yeah, there's the COTA 2. But this follow through didn't last, so I just cut that one and no overnight position. Whereas the follow through in Alcoa, there's Alcoa, was much better. And then in US Steel, this one was more like Alcoa in the sense that it held the double bottom. We got the PSAR flip. It closed pretty well, and it already had this much in the back. It did not come back and get scratched. It's holding and ready to go, and it's close to the 10-day high. So this thing is ready to break out from resistance. If it can break above the 10-day high, then it will have left all of this chop behind. And then this is going to look like an amazing turning point. Oh, come down and take a look at the Red River. That's where the Red River had the extraordinary move down, well away from the Red River. That tells you that that was a shock. And then it enters the Red River, crosses, leaves the Red River in the spring, and that makes this a beautiful entry. And now it has the entire rest of the spring and all of this summer to enjoy that whole move as guided by that move in the MACD. So that's another way to interpret it. Okay. All right. So that was the three metals. Now we'll go back to AI. So AI was the one. Yeah, this is AI. So this was a horrible gap down and a horrible sell. This was so bad. Look at that. Look how long it stayed out of the Red River. And then the Red River comes down and becomes the new normal. And you don't want to be entering in that chop. And then there was no real signal in here to get long. I tried this one because it went winter, summer, and it came and broke above the zero line. So I gave it a try. It didn't last long, so we got out of it. This was the first little hint of an effort. And look how pinched the Red River was. But that tells me this is abnormally sideways and pinched. When the Red River gets that thin and that squeezy, you could see sudden shocks that will take it back up to the top. In the same way that it was squeezed pretty tight in here, and then the shock to the system to the downside looks like that. So the MACD Four Seasons helps us understand what's going on in the tactical time frame, and helps us make sense of that. Check or hold. All right, so Caterpillar. You just look at this one all day. Notice the breakdown out of the Red River until it comes back to the Red River, and then this run is done. And here's where the spring starts getting interesting. Look at that move all the way from there to here. So you get to enjoy all of that as guided by the MACD relative to the Red River. Now this came through the Red River, held at the zero line, and is starting to try to make another summer run. So that makes this an interesting play. Ready to hold that in Caterpillar. It doesn't get interesting till it gets through all of this stuff by the 10-day high. So this is just a tactical trade here. If it breaks above the 5-day high, I'll take that as a very positive sign. But right now, this is just a little tactical trade. If it gets above here, I'd be looking to get a second position to enjoy this play all the way back to the 10-day high. Okay. So we're holding one Kata 2 entry in Caterpillar. Chevron. Enters the Red River, leaves the Red River, getting ready to run. So when the winter is over and starts coming back into the time to cash. Crosses the Red River, time to plant in the spring, and it closed. It came back down and closed right about here. So we're holding a little bit, but I have hopes. I'm ready to see that go. Don't know if it will, but the opportunity is there. In much the same way it had the opportunity back here, and it followed through nicely. Look, when it came back to the Red River, the run was done. And now in terms of the 4 seasons, remember, we're using the seasons of MACD to color code the RL10. So here's a summer, fall, summer, fall, summer is an automatic entry. In the same way that winter, spring, winter is an automatic entry. Winter, spring, winter is an automatic short. It also happened to be a collapsing dragon, but that's part of the beauty of the MACD. Dish Network, we had a double position short. We added that one on the collapsing dragon yesterday. It sold off and then started to reverse this morning. So just cash that. That was a scratch. And we got about 2R out of this one. Look at how much it stayed out of the Red River and came back in. That means the run was done. So that's a good exit. It has to get above the 0 line. If it does, then we might be interested in that, but not yet. Not when it's in the Red River. Look at this one back here. When it came out of the Red River, that moved from there to there. PSAR flip all the way to the 1, 2, 3 rollover. That's a beautiful, I should have gotten that sooner. Could have had that here, but I waited to here. So I missed that little extra bunch. Look when it went below the 0 line. All that winter move, that's that whole move right there. I should have been able to get that one because it went into the winter. Shame on me. Devon Energy, yesterday we closed. Didn't have the will to take that one. I think I missed an entry. Happens all the time. I forgive myself. Here's another one I missed. Nice move in Electronic Arts, but missed the gap and go. Closed well. But I can put a tight risk box on this tomorrow and add a continuation entry or a reversal entry out of that tight risk box, which I consider to be my 0 state. Emerging markets get smashed on this one. So we played the Kata 2 short. It closed really well, but then I got murdered on the gap up. So that was that was a -2. It went from +1 to -2, and then that's my revenge trade on a tighter risk to get +1 back. And then I was so mad, I didn't want to go to bed angry, so I just got out. Emerging markets got me. Ethereum, boy, oh boy. I mean, we've been beating the drum on this one. Oh, look at that beautiful move. So yesterday, I cashed the routine play here, and so I missed that little bit of the sell-off, but then it gapped up to here, and then it moved out more than a risk box off the bottom. So I entered and I said, you know what? It cleared here. I'll just add the second one right away. And it closed really well, and we're holding +3 just on this entry. And then our entry from 550 long time ago on the 9-day bars. This thing has now given that 100% gain. And more to follow. It has cleared all the previous resistance, and Bitcoin was strong, Ethereum is strong, all the systems go. Mexico. This was a PSAR flip, moved a risk box off the dragon, entered, took the COTA 2. I want to be postured for a follow through above the 30-day high. That's the new 30-day high, and we're holding +1 on this one and 0 on that one. So this was premature. That's me being greedy, but listening to my inner intuition. That's stupid. But I've been stupid before. Brazil cashed 3 days ago. It's been locked in this nice tight space. I now am going to treat this as the 0 state box. I will be long on a breakout here. I will be short on a breakout there. So this is my 0 space right here. Long from here, short from there. Strong move available in either direction. Brazil. Intel. The short went nowhere from here, from yesterday. So we closed it at the PSAR, stopped and reversed at the PSAR. It went up nicely. And then in the last half hour, it was selling harshly. And I said, you know what? Just get out. Didn't like that one at all. So that was a scratch and no overnight risk. IP was an intraday PSAR flip, so we're long one. IYR, PSAR flip, and then it collapsed. So we took the scratch, no position. KRE, we were short from yesterday, took the micro loss, took the re-entry on the long side here, cashed this to pay for that. No overnight risk. Marijuana, COTA 2, closed really well. I love that trade. And I was not happy with some of the other decisions I made. So I took the better trade and took the +3 and punished myself by exiting. And now I've covered some of the risk on the dumber moves I made today. So just reducing risk by cashing a winner. Holding the clean energy at about, no, that's one I missed. I'm sorry. This was short and a cover. I was thinking about entering long, but it was too close to the resistance, so I just watched that one. So I'm sorry. This was a short and a scratch today. Clean energy. Rivian, that was a quick exit to yesterday's speculative. This is supposed to fail right away, like it did over in here. It didn't, so just get out. The S&P itself had a gap down and it's just strong rocket all the way and new 30-day high. Treasuries, nothing, sold off, no position. Tesla, breaking my heart, dude. Killing me. We closed a nice win. Yesterday we went short on when it turned to winter. It did nothing, so it just scratched. And I missed the long entry on that one. But it's been dead money to me. And then U.S. Steel, I bought the COTA 2 and the PSAR flip, so we're long with about 0.5 in hand. So this is early days in most of those trades. I just want to highlight once more the breakout from the Red River after a deep winter, and then it reverses and it crosses the Red River still in the spring. Man, I take that every time. And then summer, fall, summer is an automatic reentry or a second position. And then it came back and just closed into the Red River. That was enough. So that's the quick lesson on MACD for today. Intraday sniper trade of the day. EWW, Mexico, 3 minutes. Notice yesterday's tight close here. Look how pinched the Red River was. And so today's gap and go, it's just starting to get some expansion on the MACD. So here's the OR3. There's the instantaneous long, standard risk, routine exit at the edge of the dragon when everything rolled over. So this just couldn't go any further and rolled over. That's enough. +1, +2. So 2R on the initial move. Check or hold. And notice how it came back on the MACD. So the run was done. Nice exit. Caught a 2 reentry. Ugh. Grinding. PSAR exit. Caught a 2 entry. Ugh. Grinding. Missed the short when it went to winter. And was not really happy with a lot of the decisions I was making on the 30-minute. I was not in a very good zero state today. So we just took that one and cashed her out there. And so that's about 2.5 hour supplemental on the intraday. Just didn't have it today. And I only traded up into lunch on the. Let's see. I think it's just the one. Let's check the boys here real quick. Nope. Yep, there we go. All right, so this is Hamad, new foundations student. So he is working on the cues on 3-minute. He notices winter, spring, gives it a try. Exits here when it rolls over. That's a pretty nice trade if this is your standard risk. So I need you to start adding some notes in here to include what your R capture was, and then any self-coaching comments where you're going to coach yourself on how you did, and you're going to try to anticipate what I'm going to say. And then you compare your coaching comments to what you think I'm going to, and what you think I'm going to say to what I actually say. And then that tells you if you're developing a coach's eye. Okay. So if that's your risk, then this one looks like it was about a +3. Notice there might have been a 2R battle drill second position here. This is Apple on the 3s. Standard entry, Standard exit. Also about +3. Notice he gets out before it gets to the Bollinger Band mean. And this whole price action happened on the edge of the river in a rising Bollinger Band mean. So the river is rising and he's on the northern slope of it. And the Z3 lines are expanding. All of that's good. And when it rolls over and you're starting to get Bollinger Bands pinching and the Bollinger Band mean is catching up, that makes this a great exit to lock in 3. Amazon, probably +2. Nice work. Nothing to hate on that. So Netflix, this would have been a COTA 2 because you have a low and a higher low. So you have some of that mojo. This one comes all the way back to here. So this is really not a COTA 2. This is really an SSC. And when that doesn't work right away and starts rolling over, I think I want you to scratch here on the PSAR flip because this is supposed to go. And when it doesn't, you get out. And then that would save you this much of a loss for getting out here. And that would make this a scratch instead of about a -1. Oil, I don't mind that one. That's a reasonable effort on a gap down, crosses the Bollinger Band mean, trying to go. Once again, this is supposed to go right away. When it doesn't, I think I want you out here when the PSAR flips. Don't stick around just because you want the trade to work. That cost you that much when that should have been an exit here. Exiting here instead of exiting here cost you that much extra. Okay. All right, let's see. OR3, we should be long right here. Trailing PSAR, that should be the trade. And yeah, we got to have the focus. Got it. This is a reasonable effort after a nice run up and now a breakdown. That's a great exit for a scratch. I like the re-entry when it breaks below the VWAP. When that doesn't work right away, I think you can get out here rather than here. I understand that one. That's a pretty good management. You gave it that much time to go and it didn't. I think that's a reasonable approach. I don't have any qualms in that. I just think you got to get this one. Expanding span of control while you're also busy in the day job is a hard time. That's a hard time to begin expanding span of control. Oops, sorry. Wait a minute. Let me get this other one. Okay, Alcoa. I would like to see you take that OR3 long here. And then instead of taking this in, when this doesn't go any further, I think you can be out here. And now your loss is even less than 0.4. I love that short. When that doesn't work and it crosses the VWAP, you can get out. And then you can get long here with a stop there. and maybe you could gain a little more. But still, that's pretty good. That's about as tight as that could be. Yeah. Excuse me. Yeah. Okay. So Tesla. If this is my OR3, I think you could have been short here and scratched. And then we could be long here with this risk. And we'd have made more by entering here instead of here. I like that short. I like the stop and reverse. I like the second shot at it. On Tesla, it's worth giving that a shot. So I don't have any heartburn with this. All right, NVIDIA, OR3. We could be short here, and then we get this trade to here, and we make bank on this instead of on this. So being prepared to trade or having more in your chart or in your span of control means that we miss that. Here's the PSAR flip with a risk box right there with an exit at the edge of the dragon here. I love that trade. I like this short, and when it doesn't work, I think you get out here instead of waiting. I love the reentry. When it doesn't fail further, this is a great exit. And then here's our PSAR flip, but you got to be in the game to be playing. But I appreciate the effort. Tim, I would like you to start taking a look at the 30-minute. You've seen now for about 3 months what I've been doing with the 30-minute. I think that would be very well aligned to your time frame. I'd like to see you start picking some of those swing champions that I'm doing. Same symbols you're trading, but I think you want to start looking at the 30-minute too, to give a little respect to what you're doing at work as well. It a little bit easier to manage and wider stops. All right, shifting to the daily report. The kids were awesome in their soccer match today, the little monsters. We have a very simple plan. Protect our goal, get the ball, go to the goal, shoot and score. Can you run through the other team? No, you cannot. What do you have to do? Go around. What I would do on span of control, Mike, is I would double the time frame in order to double the symbols to practice on, so that you have more time to prepare. And you won't be as hurried. Reduce your position size so that you're not increasing risk at the same time that you are trying to expand your skill set. So you've got to reduce your risk in order to do that. And then you gotta start. It's like getting into the weight room and increasing your capacity. You got to just add a little more resistance, and you're going to have some discomfort until that becomes the new normal, and then you have to keep kind of stretching. So try to stretch more than your comfort level, and then ease back into what is comfortable, and you'll find that you can actually increase your span. The same way that when you're going from the 5-minute and you want to go to the 3-minute, and it's hard, so you try trading on the 1-minute. And then when you slow down from the 1-minute and just go back to the 3-minute, that seems like forever. But what you really did was went from 5 minutes to 3 minutes by overcompensating to the ones and then coming back to the 3. So you can actually do the same thing with the number of symbols that you span of control. Reduce your position size way down and try to double the number of symbols. And then after you burn out on that or you get exhausted, go back and just add one or two more, and it should be easier to handle. So if I could handle two, I might try to handle five. And then I couldn't do it. So then I'd go back to trying to do just three. And then three seems easy after handling five. And three will seem so normal that it becomes easy. But what you really did by that was going from two to three to increase your span of control. So those kinds of little comfort and discomfort drills you'll find to be very helpful. All right, daily report. So we're still in bullish quiet. Our little gains today put us right back in the driver's seat on the long side. All of that is looking positive. That's looking positive. Look at the names that are near their 10-day high. Coca-Cola, the Dow Industrials, Visa, McDonald's, and Nike. Nothing sexy or groovy or high speed about that. Just solid, great companies, except for Nike. Slavers. But the other conservative companies are doing pretty well. Dow 30 tactical, lots of breakouts. Like I am immediately drawn to McDonald's. That's where we should be trading. Merck, Goldman, Chevron. I need to add McDonald's to my swing list. If I went and looked at that, I'm just going to be disgusted with myself for not reading my own charts. But let's see. Oh, God. Why can't I even eat my own cooking? Are you kidding me? Let that lesson sink in. When you see these things, there's something significant when it's breaking out of a 1 month box, a 3 month box, and a 6 month box. And Merck. So Merck and McDonald's, well, I'm in there fighting hard on stupid symbols like International Paper. I should be on McDonald's. What is wrong with me? If I go back and if we looked at this will make you even sicker. If I go look at the daily, look where it is in its 150. That thing, 20 days ago, it was trying to tell us. And I was trying to trade it inside here, but I missed all of this. When it broke out of that, look, when the winter turned to summer, it's been summer ever since 270. That's 10% gains, easy. And it's well above this, and that's going to keep going? Shoot. Learn from my mistakes. I might as well just punish myself by looking at Merck. That's going to be the same thing as McDonald's. Yeah. It's still in earlier days, but look at the Kata 2 on this. God dang it. And then here's the emerging dragon breakout. I should have been on that one 6 days ago, and now it's above the peak. And this is all just free and clear. There's no resistance in sight. Hook up my wagon to this and go. Dummy. That's me giving myself forgiveness and gratitude. Yeah. So this is earlier days. Chevron or Goldman Sachs is just starting to climb out of the depression. and Chevron just starting to climb out of the depression. Should be investigating those. I leave it to you to look. This NDX is your friend, man. I'm telling you. Those green lights are flashing. And IBM is collapsing. So if you needed something to be ready to punish on weakness, why wouldn't we look at IBM? Sure. Look where it is in its 150. That's a Kata 2 all the way down now. It had its little moment of effort. Yeah, nice try. Crossed, PSAR flipped. If it breaks below here, I'm going to be so short that one. And if it breaks below this, my second position short all day. Look at it, just crossed into the winter. It wants to go. Now, if the S&P and the tech start to fail, but IBM is the worst, that's the easiest short you ever had in your life. That's called scenario trading. This is going to be the same thing. EFA, that's the globals. Global large caps, Mexico, gold, and then earlier days in the S&P, that's good. XLB, that's good. That's the metals. Healthcare, that's good. That's Merck. Healthcare. Oh, let's see what healthcare. Got it in there twice. I must really like the healthcare. A few auto framers. There's Caterpillar, IBM ready to collapse. A few squeezes of interest. Energy, oil, JP Morgan and finance. I like it. There's your regression line fractals. Who are the leading candidates? The deep values that are either ready to rebound or collapse further. Caterpillar, JP Morgan, Pfizer. The overheated ones or the ones that are still on afterburner and growing, Nvidia and Intel, Microsoft. Yep, all of that ready to go. 5 candidates in the S&P for Godzillas, all stealthy. Only the VIX in the tactical symbol set. There's a couple double volatility greens here. KMX. He's right in the middle of his long-term and midterm, so that's more like a fence sitter starting to move. PGR and TAP. This one is a fireworks, and this one is at a 10-day oversold. I like both of those. Standard stats in the auto framer. Look at all your semiconductors. NVIDIA, Texas Instruments, and Intel. This is the blue line for better than 2-to-1. Clean energy, Boeing, Simon Property Group. Out of our entire tactical trading stack, the only volatile mover today was biotech, but that's one of our large liquid ones. And it is fully priced at the near its 10-day high. Is that going to be a large move up and ready for breakout, or was it a big move down ready to collapse? Let's go see what that is. So that is really the anomaly. Big move up, ready to break out. This is good. Still early days. Look, this is long, harsh winter, right? Here's how you read it. Summer rolled into the fall. Fall collapsed into a brutal winter. Tentative spring. Here's where it left the Red River. Didn't fail. And now it's been in spring all the way up into here. That's one I missed. Should have had that. That's one of the 30 most liquid ETFs out there. Just crossing the zero line. Only tomorrow will this be in the summer, and it's got a reasonable chance of getting all the way back up into here. So that's still the potential gain, with maybe half of that box is risk. 1, 2, 3, 4. I like XBI. By the same token, if it fell below today's low, I'm short that one like a hog on cake. Being dominated in the summer by the MACDs. This shows you how broadly based the strength is. This is a market move up. And it's being led by Europe and Mexico, not by our techs, although it may be their turn. Mexico's been better longer. So has Europe. And like a dummy, I just keep watching Merck and McDonald's go green all across the board. When am I going to read my own chart and pay attention? Forgiveness and gratitude. All right, now the frog list for trading value. We're looking for that combination of consistency on the daily moves, a high frog quality number, right? And large daily ranges. You multiply those two numbers together, you get this rank, that ratio, and then you score it by that rank. Tesla, marijuana, clean energy, NVIDIA, Texas Instruments, and Intel. Look at all the semiconductors are especially poised for an interesting move. Don't know which direction, but it's going to be big. All right, that's everything we got for today. We'll get this published and posted. Thanks for your patience.